with a company which is the best representative of consumer sentiment on street, one of the best, and that is Dabur. So Dabur is here with us right now. There's a big case for assessing the demand sentiment there. Mr. Mohit Malhotra, CEO of Dabur, is here with me right now to chat about all of that. Mohit, thank you so much for your time. Always wonderful to have Dabur on the show. Let's talk about first the kind of benefits your company is likely to have because of corporate tax cuts. What are you planning to do with that retained money? Will you pass it on? Will you keep it for further capex? First, talk to us about the effective tax rate changes.
Well, the corporate tax rates have gone down for the entire industry and the corporates. It's not materially impacted us because we are already availing fiscal benefits where we are doing our manufacturing. So we are actually almost at a minimal rate and even below that. So it's not materially impacted our business though. So there's a huge euphoria in the corporate and the entire sentiment is improved because margins of other companies have got impacted and hopefully that'll get passed on to the consumer and the consumer sentiment should also improve. But for us, it's not really materially impacted us. Our effective rate is roughly in the range of around ranges between 18 to around 20-21% is what we guys pay.
How's the demand outlook looking right now? How is observation on the second quarter first? Because you sounded off a cautious note despite a good monsoon. What is the reason for that? And by when do you start seeing some material revival on ground?
No, I think Dabur did very well relative to the competition in the first quarter. We almost had a double-digit volume growth trajectory as compared to all our competitors, which were low single digits. So I think first quarter was fantastic for us, and that came on back of our improvement in our infrastructure, our introducing a power brand strategy, disproportionately investing behind our brands, our market share soaring across all the categories. So the real slowdown impact we've actually seen in the second quarter, which is what is coming along as we guys are speaking. And sequentially, the demand has been slowing down in all the categories where we guys are operating. Like the category which used to clip at around 10% to 12% volume levels have now come down to a level of around 3.5%. In some categories where we are really present, like oral care, which is 90% penetrated, the category growth rates are around 1 to 2%. That being said, our market shares are trending much above the category growth rates, and we are gaining shares across the categories where we are present, be it hair oils or shampoos or toothpaste or healthcare categories, or even for that matter beverages, where the toll has been maximum because the category decline are -7 there. But Dabur Real is grown, we've gained around 300 basis points of market share there. So I don't see our performance relative to competitors has been anywhere lackluster. It's actually been superlative. But in the current quarter, we're seeing huge headwinds, which are difficult for us to counter. But I think across the board, the sentiment is down, so we should not be the only exception.
So double-digit growth, and how will you manage it from here on? Do you think that coming back anytime soon?
We are very close to the quarter ending already as we speak. We are end of September. It's very difficult for me to divulge all the numbers very transparently here. But I think that being said, the near term, we are facing huge headwinds. So nowhere we are close to we are double digit. We are actually talking about low single here. So it will be low to a mid-single kind of a volume growth that you should expect in the near term. But long term, we are targeting ourselves to a mid to a high single-digit volume growth. Definitely mid if the festive season revives and if the sentiment shows up behind some sort of a fiscal stimulus, then definitely high single-digit is what we are aiming. And in healthcare brands and the healthcare portfolio, which is 30%, there we are not seeing so much of impact of a slowdown as compared to home and personal care, where the slowdown impact is tremendous.
Leave us with your thoughts on the rural side of the spectrum. What are your observations on demand there?
No, you're absolutely right. Rural demand used to be very high. Actually, if you look at last year, September, same time last year, We saw rural clipping at around 20%, if urban was clipping somewhere in the range of around 15, 16%. And now if you look at the rural demand, it is, which rural used to be higher than urban last year same time, but now if you see, rural is below urban. So if the overall demand is in the range of around 7% in terms of value, rural is in the range of around 4-5%, and urban is actually trending at.
All right, Mohit, we'll let you go on that one. Thanks so much for joining us on